Hello, folks. It's been an interesting several weeks. I haven't posted anything. Throwing my 2 cents into the fray didn't seem to make much difference, and so I haven't. I don't feel like anybody really knows what's going on right now, and so I didn't want to pretend that I did. All I can do is report on what I see, and so let's do exactly that. So what we're looking at here in this first chart, on the left side we've got gold futures, GC, and then on the right side we've got spot gold. And so as of Friday's close, we got 1735 for futures and 1727 in the spot price. So only a delta of $8. What I've been noticing pretty consistently for the last week or two is that was more like 25, 24, $25, the difference between these two. And of course, the delta indicates a shortage, lack of availability um, of physical gold. And so maybe having the price, that delta closed down to only $8 on Friday, indicates some easing of that physical shortage. From the big picture scheme of things, yeah, it was a big scary plunge. Um, let's throw pretty much a double bottom there. November of 19 and March of 20. Uh, that was a big scary plunge. Trust me, I felt it. It didn't feel good down here. Didn't feel good down here. So um, I'm calling that the big scary plunge because that's exactly what it is. But now, for people who chose to sit through the big scary plunge or weren't paying close enough attention to their portfolio, and by the time they realized, we're already down here, by the time they're thinking, maybe I ought to do something, and it's very hard for humans in general to sell at a loss. It's a hard thing to do psychologically, and so many people held right through the big scary plunge. Now, fortunate, those that did were back looking good in gold. I mean, pretty incredible. Double bottom all the way down here at 1460 essentially, and now we're back up at 1730. So $300 in a month. I'm having to double check because it's truly remarkable. Yeah, so $300 in a month. Amazing. And so anyway, I don't what you feel about gold, big scary plunge or not. Gold's doing just fine. Now it did run into where's that 14 April, so we're 2 weeks ago basically. Reached the upper level of this Andrews pitchfork, which, as we know from Andrews' work, that's a likely place where price will run out of energy. And of course, that's exactly what happened. Um, and again, from the perspective of gold's doing just fine, so we run out of energy up here at the upper median line, mild pullback to a obvious, a visually obvious support level, and now price is back on its way up. Um, this was supposed to be a quick video. Obviously, I've diverged. So, from a Elliott wave perspective, we could look at I've got a 5 wave structure potentially building here, wave 4, and so now price is starting on wave 5, and in commodities, typically in commodities, what you get is that wave 5 is the long wave, the big wave. Oh, wouldn't that be fun? And again, folks, I'm just spitballing here. There's a big wave 5. That's pretty steep. Can we do this? See, potential there that gold is already on its way up to challenge the previous high. Just for funsies, let's pop out to the monthly time scale. Sorry to jump around so much, folks. See, back up here at 19, we're challenging the previous high from 2011. So, that's the kind of thing that's going on. And again here, let me, let's just look at price. So this is a monthly time scale, better yet, monthly time scale. We'll get rid of that moving average. Oops, ended up back on futures, which is fine. Sorry here, folks. There we go. That's what I wanted to show. So look at that price action. So we come back here in where are we at? October, September, so fall of 18 at $1,200, and here we are at $1,700 18 months later. Anyway, that's just, gold's doing just fine. That's my real point from the perspective of MACD, and of course again we're on a monthly chart. Look how overbought MACD got back in the 2011 rally, and so MACD has a long way to run before it reaches that level of overboughtness again. MACD is not a bounded indicator. It can go to infinity if it wants to, but it tends to stay within a range, and so it's not uncommon that MACD will roll over at the same kind of level that it reached in previous rallies or downtrends. So anyway, just something to think about. Let's keep moving here. So obviously we're interested in gold. These are the gold stocks. GDXJ is the junior gold miners ETF. It's pretty much what I use as my proxy for the mining stocks, and nothing really remarkable there other than, again, big scary plunge. Here, let's look. This is the HUI. So this is a mining stock index, the HUI, and looking pretty good. Big scary plunge, but a nice strong rally coming out of that big scary plunge. We got MACD strong into bull mode. Price is just stair-stepping higher. Let's see. You guys can't hear inside my head, so what I'm thinking currently is that those kind of things, call that a flag, pennant, whatever you want to call it, not uncommon that they serve as halfway markers in a price move. And so again, just spitballing, let's say, if that was the price move, let's make that a different color so we can easier to see. And let's squeeze price down a little bit so we can do that. So the idea that I'm showing here in the chart, I scrunched it too much. We unscrunch it. There we go. Is that if that pennant or flag trading range, however you want to look at it, is a halfway marker in this price movement, there's the potential that's already in play. I want to look and see where we at relative to previous price structures. So there's our last, that was the last big high. Where was it? All the way back into, yeah, so that was the top of the 2016 rally. So again, this current mining stock rally that is underway has the potential to blow past the 2016 rally. Oh, and isn't that interesting? I just noticed. How funny. Let's we want to be, that's the HUI, so let's go to there, and we want to be on the HUI, and not that HUI. Bear with me, folks, here. We want to be on that HUI. We're still in our daily time frame, and what I wanted to look at, actually, let's just go to the weekly and get rid of that moving average and the volume and the MACD. Let's focus on price action here. Man, look at that. Whew. Look at that. Look at that rally, folks. Wow. Wow, wow, wow. So big scary plunge, but darn, look at that rally. Look at that rally. I don't typically look at the HUI. Like I said, I prefer the GDXJ, but darn, what a thing going on. So that's what I was noticing back in the daily time frame, is that the HUI is already up here at the peak of 2016, and in my opinion, this rally is just getting started. So if we look at, let's just spend a couple of minutes here. That's pretty much a gap. So if we look at, kind of think of that as no man's land. Oh, and then we got a round number at 300. Round number at 300. And so that's another, we pay attention to round numbers because of human psychology. People tend to focus on round numbers. So 300 to fill that gap. But my guess is once we push past 300, the next target is going to be up at this level of 391. And again, at 391, be very surprising if price didn't push up and test 400. So, again, potential of this current price movement, once we get through 300, 400 becomes the next target. So really nice. That's really nice action in the stocks. That's a good thing to see. I'm at 14 minutes. Let me speed it up. So equities, I noticed a couple of things. So if we look at the Dow here, we've got, again, big scary plunge, price coming back. Let's hide volume here for a minute, cluttering up the chart. So big scary plunge. We've got this price rally. You can see how price has rallied back to the 50-day moving average and then pulled back and has now again Friday. You can see that we closed up here. We're testing, and of course this moving average is acting as resistance at this point. Resistance, pullback, resistance. We don't know what's going to happen. We won't know till Monday, obviously, and what happens there. From a Fibonacci retracement perspective, price has retraced. That's the 50% level of the big scary plunge. Yeah, so 50% of the big scary plunge has been retraced approximately. Maybe price can rally up here to the 618, so we get 25,000 before price rolls over. Don't know. We got MACD is in bull mode, almost full on in bull mode, pretty darn close. If we look at here's the S&P 500 on the right, MACD is in full on bull mode. If the let's stay here on the Dow. One of the things that I noticed on the Dow, let's put volume back up. Volume. Hello. There's volume. One of the things I noticed here is that volume is actually declining, and so in the perspective, what we look for in volume, what we would like to see is that when price rallies, volume increases. It's basically we want to see volume increasing in the direction of the primary trend. So case in point here, if the primary trend were up, we'd want to see volume increasing. So more and more people are interested in buying as price goes higher. And that's exactly what we're not seeing in this current rally, which is suggestive that it's not sustainable. It's a bear market rally. It's going to roll over, and it's at a pretty good place to roll over right now. It's already failed to penetrate the 50-day. We're at the 50-day again. Same conversation over here in the S&P 500. Price has actually penetrated the 50. Same pullback. Popped over the 50 on Friday's action. Again, not a bad not a bad place to roll over if that's what's going to happen next. In my opinion, at this point, the only thing that is supporting the equity markets and most other markets as well is the Federal Reserve pumping money. And so one of the things I've noticed in the last 2 weeks is that, let me blow this up a little bit so it's easier to read. The Fed is now starting to ramp down, gradually reducing Treasury purchase. So we were at 75 billion per day. And just as an aside, folks, so in the last round of official QE, Fed was putting $120 billion per month. So that was the maximum QE that we've ever done in the past, 120, and let me say again, acknowledged. A lot of stuff goes on that never makes the print, in my opinion. But so anyway, max money pumping in the last QE, $120 billion per month. Here, the Fed's been pumping $75 billion per day, Just mind-boggling. And anyway, so 75 billion, ramped it down to 50. Next week they're ramping it down to 15. So from the perspective of, so there's a 75 goes down to 50, goes down to 30, goes down to 15. And so anyway, from the perspective of when is this bear market rally likely to roll over and make the next big scary plunge down, which is what I'm expecting. We got another, that wasn't the bottom right there. That was not the bottom. There's another big scary leg down coming. Big scary leg down is more probable when we see that the Fed's doing that. So just caveat emptor. Let's continue. Again, just wild stuff going on right now. I apologize for going long, folks. Really, I intended this to be a short video, and that's not what we're getting. But it is what it is. So this is crude oil, and kind of mind-boggling to me. I don't know that I've ever seen a price chart with a negative print. That's what that is, folks. That we're looking at a daily time frame. This is the light crude oil futures, and on that day, minus $40. So people were paying the buyers. That doesn't make any sense. They were paying people to take their oil away. It's basically, come take the products off my shelf. I don't want them anymore. And then of course that resolved the very next day. Now we're not negative prices anymore. But look at this. Actually, why don't we step back to a bigger time frame? So look at that, all the way back from stop. Oh, there, that's what I wanted. Let's do that. Sometimes a quick price channel can help clarify the picture. And so, we can see that this is all the way back. That's 2008. So oil has been in a downtrend since 2008. So there was a peak, $140 a barrel, a low, lower high, lower low, lower high, lower low. Oil is definitely in a downtrend. So, and this was a decisive as far as the recent action. That was a very decisive break of what you would have thought would have been a significant support level there at $30. Yeah, and see, really, let's get rid of that. And it actually goes back further. Hello, horizontal ray, that guy. What I'm seeing is, let's look at $30 as a nice round number, and something, so that's not, it's actually higher than, hello. It's more like 40, 35, maybe it's 35. That's more like it. Kind of sloppy in there. And, support and resistance, I like to think of as their zones. For example, I've drawn a thin line there, like that was the support and resistance demarcator. And in reality, it's a zone. You see it down here that, yeah, anyway, I'm going off on tangents. I won't do that. Big scary plunge in price, waffling, mostly sideways. Big scary price, took out the previous low. MACD's puked. Not a pretty chart. Not a pretty chart. Brent, Brent oil. So we can see here. Actually prefer looking at the Brent oil chart. I guess it's kind of a macabre. it the big plunge in the price of oil is more visually dramatic in Brent, and so I like to look at Brent. And I just noticed here, I'm not a big Elliott wave person, but I do pay attention to wave structures. And so what I'm noticing here is that we have basically a 5-wave pattern, potentially. And same thing I said about gold before. In the commodities, the 5th wave tends to be the large wave. I don't know if that is true of oil or not. Have to be careful with generalities. But see, what I see is wave 1, 2, big wave 3, 4, and then a small, at least so far, a small wave 5, if that's what we've got. But that could be a complete price move. If oil were going to rally from here, that would be a nice look for a completed downward price move, 5 waves downward, and then a rally back up. From an Elliott wave perspective, 5 waves happen in the direction of the primary trend. So that would suggest, if that's a 5-wave structure, that would suggest that the primary trend in the price of oil is down. 3-wave, and continuing with that idea, Elliott wave terms, we'd get some kind of 3-wave. Let's just draw it for funsies. And that's, I'm not, the size is not scale or anything. All 3 of those waves are too big. So anyway, a 3-wave movement counter trend, and then the next leg down, and may or may not take us to new lows. So wild to see people talking about $12 per barrel oil. So interesting times. Now, Dr. Copper, as an economic indicator, a lot of people look at Dr. Copper when they want to get a feel for what's happening with the global economy. And so, again, this interesting chart. So, daily time frame. This is back, what's that, going into late January, and in my watching of the markets, I perceived a dramatic change of sentiment along in there, where we went from, oh, it's just an Asian thing, to, oh, you mean it's not just an Asian thing? and then basically all the markets puked. And so that's what we're seeing here in copper, is that we got the uh, big puke down to a visually obvious support level and a round number, 250 in copper. Bounced sideways for a couple of weeks, another big scary plunge, and now we've got a rally. And again, I would suggest that the sharpness, the steepness of this rally is indicative or suggestive of a bear market rally, not the beginning of a sustainable uptrend. So that's all I got for you today, folks. I'm at just over 30 minutes. I didn't intend to go this long. Hopefully I've provided some value for you. Interesting times. I will talk to you again soon. Have a good one.